Welcome to the Daily Business and Finance Show. U.S. debt skyrockets as shutdown loans, Megacap rout predicted, and Bitcoin takes a dive, a financial roller coaster. Ford's lightning price surge, SoFi's downgrade slide, and Xiaomi's electric entry, the auto industry in flux. Enterprise Products' $2 billion capital raise and Libyan oil field shutdown fuels energy market turbulence. Lastly, Nasdaq, S&P, and Dow extend downward trend into 2024, a look at the future of stocks. Stay tuned after this short ad break to delve deeper into these headlines. The United States national debt has surpassed the $34 trillion mark for the first time, as reported by the Treasury Department. This development coincides with Congress's struggle to prevent another potential federal shutdown due to disagreements over government funding. The expense of managing this debt is escalating quickly, with projections indicating that interest payments could soon hit $1 trillion. Credit rating agencies like Moody's have reacted unfavorably, downgrading their outlook for the U.S. from stable to negative. Finger-pointing is rampant between both political parties regarding who is responsible for this predicament, and it will require significant compromises to rectify.
Analysts from Wall Street are forecasting a downturn in major technology stocks for January. This includes industry giants such as Apple, Amazon, Alphabet, Meta, Microsoft, Nvidia, and Tesla. The prediction comes on the heels of overinvestment by active funds and a potential pivot away from these market leaders if the focus expands beyond growth stocks. The Nasdaq 100 has already kicked off 2024 with a decline of 1.7%, marking its third most severe commencement since the dot-com bubble burst in 2001.
On Wednesday, Bitcoin experienced a 7.8% drop, reaching a low of $41,454. This could potentially be attributed to investor worries regarding the U.S. Securities and Exchange Commission's possible non-approval of a spot Bitcoin ETF. Although it managed to recover some of its losses, Bitcoin's downturn also had an effect on other cryptocurrencies such as Ethereum and Cardano.
Ford has announced a price increase for its 2024 F-150 Lightning electric vehicle. The base Pro trim is now priced at $54,995, while the XLT trim stands at $64,994. There's been a rise of $2,000 in the Lariat trim, bringing it to $79,495. Interestingly, the Platinum model has seen a decrease by $7,000 and is now available for $84,995. A new addition to the lineup is the Flash trim with an introductory price of $73,495. Despite reducing production targets due to slower than expected EV adoption rates in the market, Ford's F-150 Lightning continues to be the best-selling full-size electric pickup in America.
The shares of SoFi Technologies experienced a drop of 8.6% following an evaluation by analyst Michael Perito, who downgraded the stock due to its high valuation. This comes after a significant 45% increase since the third quarter earnings report in 2023. Despite the potential for profitability in the fourth quarter of 2023, Perito identifies more risks than benefits and recommends caution. This viewpoint deviates from the average ratings on Wall Street.
The esteemed Chinese technology corporation, Xiaomi, plans to make its grand entrance into the electric vehicle market in the year 2024. Their inaugural model is named the SU7. This car impressively offers a driving range that can reach up to 800 kilometers, which outperforms Tesla's renowned Model S. Xiaomi's ambitious goal is not only to integrate their electric vehicles with their smartphones and home appliances but also to secure a position among the top 5 global automakers within the span of 2 decades.
Enterprise Products Partners has declared a public offering of senior notes amounting to $2 billion. This sum is divided equally between notes due in the years 2027 and 2034. The funds raised will be allocated for general company operations, which include growth capital investments and debt repayment. The settlement is anticipated to occur on the 11th of January, 2024.
The energy sector experienced an increase of 1.6%, primarily fueled by a resurgence in crude oil futures. This was a result of protests leading to the closure of Libya's Sharara oil field, which sparked apprehension about Middle East conflicts interrupting global oil supplies. Consequently, companies such as Marathon Petroleum and EOG Resources saw substantial gains. In addition, the ongoing attacks on vessels in the Red Sea by Iran-backed Houthi rebels have escalated worries regarding potential disruptions to vital oil transport routes.
In 2024, Wall Street saw additional losses, with the tech-centric Nasdaq Composite spearheading the decline at a rate of 1.1%. The S&P 500 and Dow Jones followed suit, dropping by 0.8% and 0.7% respectively. In light of economic instability, the Federal Reserve suggested the possibility of 3 interest rate reductions within this year. However, their exact timing is yet to be determined. Real estate was at the forefront of losses in 8 out of 11 S&P sectors, while energy, communication services, and utilities experienced growth. Job vacancies in November decreased more than anticipated as doubts increased regarding imminent rate cuts. And that's a wrap on the Daily Business and Finance Show. Stay savvy, keep investing in your knowledge, and we'll meet again tomorrow. Farewell. I'm Montgomery Jones.
And I'm Amalia Dupre. Until tomorrow, stay safe and farewell for now.
This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. This podcast provides information only and should not be construed as financial or business advice. Check out our other podcasts in our network at classicstudios.com.